Let's now take a look at how markets opened this morning. Asian stock markets had a mixed start to Monday. Investor sentiment points to risk-off bets here. Gold reached record highs above $2,100 at the beginning of a busy week. This week is filled with economic data that will test markets' bets on aggressive and early rate cuts from major central banks next year. Well, focus will specifically be on Friday's U.S. payroll data for the month of November. The data has to be good enough to maintain the soft landing scenario without endangering the likelihood of an easing. Traders will also look for clues to the global economy's health, with Australian growth and Chinese trade and inflation data scheduled to release. South Korea and Australia led advances in MSCI's broadest index of Asia-Pacific stocks. Outside Japan, Nikkei slipped, blue chips in China fell after the nation's central bank instituted yet another strict yuan fix. Gold reached a new high barrier as investors dismiss Federal Reserve Judge Jerome Powell's remark that policymakers are not in a rush to lower the rates. Bitcoin neared $41,000, extending the year's rebound as the industry awaits potential approval of U.S. spot Bitcoin exchange-traded funds. Well, the rally in gold and Bitcoin comes even as the dollar is strengthening and policy-sensitive two-year treasuries are retreating after their major gains on Friday. On Friday, U.S. stocks closed at the highest since March 2022 and two-year yields at the lowest since June. But Monday could be different. While in crude markets, oil climbs as tensions in West Asia come back into focus. The fact that 3 commercial vessels were being attacked in the southern Red Sea raised the possibility that the Israel-Hamas battle will escalate into something more extensive. The oil flipped between a gain and loss. Geopolitical tensions raised concerns over supply. However, the sector's future was clouded by uncertainties around OPEC Plus, output cuts and the surge in global fuel consumption. And for more on this, we're now being joined by Dr. Vikas Singh, senior economist, and he's joining us live from Hyderabad. Welcome to the broadcast, Dr. Singh.
Thank you so much for having me here. Good morning to everybody.
Good morning, Dr. Singh. Now, what is your outlook for December after the euphoria in the month of November?
I think from the stock market perspective, I think the economy is doing well, and that's the only way we should evaluate the rise and the fall of the stock market. Political events happen here and there, but I think the long-term impact of the stock market is largely dependent on how well the economy is performing. In that sense, the economy is really doing well. I think out of the 10 different industrial sector, close to about 8 or 9 of them are doing well. Our only challenge has been in job creation, but I think it will catch up sooner than later.
Right, Dr. Singh, you speak of how the economy will continue doing well. The question being that, will gold continue its record-breaking price rally despite a slump in demand from India?
So the demand for gold is robust. I think the gold, like all cyclical commodities, is extremely dependent on the demand and supply factor. I think over the last month or so, it has picked up again. And people buy gold in India mostly for consumption. They don't buy it for investment. In that sense, I think the next 1 month, there are several weddings planned and there are several consumption factors which are kicking in. So my view is that the gold is going to perform at least for the next quarter or so.
Right, Dr. Singh, we saw the state election results coming out yesterday. What do the results of these state elections mean for India's stock market in the near term and next year as well?
I think the state election is a cursor to what's going to happen in the 2024 general election. I'd like to inform the viewers, and they will probably understand this better than most others, that it is almost a given that the Prime Minister Narendra Modi will come back to power in 2024. The state election, especially the result in the 3 states in the Hindi heartland, has just added to that certainty. Also the fact that the foreign institutional investors and the global market had already factored in that the Modi government will be back in power. So in that sense, it's not a surprise. My view is that the stock market is going to go to a new high in the next 1 year or so. But I like to caution the viewers here that please don't see the whole stock market from the perspective of who's in power and who's not in power. People should invest based on their vision of how the economy is going to do, and the economy is doing well. So in that sense, I don't see the demand for equity going down. We are in for a new high.
Right, Dr. Singh, thanks very much for joining us here on WION and sharing insights with us on this story.
My pleasure. Thank you so much.